Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handset Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now moving into this week, we've had this disappointing data out of the US, the inflation data and also the retail sales come in disappointingly, and subsequently the Treasury yields fell sharply on Friday, and that sort of has carried into today as well. Another day of dollar selling pressure. That reversal on the dollar could well be a bit of a theme through this week, with not a great deal of major US data to really sort of drive expectations. But the markets are still really looking forward towards a June rate hike, but it's interesting that we're starting to see this dollar correcting back on this negative sort of read through from the data. Now, in terms of the rest of this week, we've got some Eurozone data, some UK data, quite a large amount of UK data actually, but starting on Tuesday with the Eurozone growth numbers, they could have an impact on the euro, because the euro started to find a bit of support. Will that continue, and will that GDP number outdo the expectations, considering we've had some improving PMIs, some strong numbers there coming out, and it seems as though that the economic recovery in the Eurozone is moving as Draghi would have wanted. And looking at the UK data as well, we've got CPI, we've got wages growth and also retail sales, all key numbers this week for seeing how the UK economy is going, and certainly that will have a big impact, I think, on sterling this week. Now, in terms of the oil price rally that we've had, I think that's a short covering rally. That's sort of come as the inventories numbers have shown a large drawdown, but also news out over the weekend that OPEC and Russia, or more specifically Russia and Saudi Arabia, are sort of pushing towards possibly extending the production cuts into 2018. Certainly that has sort of driven a bit of a short covering rally in the last sort of few days, and it looks as though that is continuing, and some key levels coming up to there. But in terms of your Forex markets, well, in terms of your Forex markets, we've got the euro, which is finding its support at that 108.50 level. That, I think, is a key level now, near to medium term. That remains the support, and is being used as a bit of a floor for the breakout. That is a neckline support, and a breakout above 10.22, if that were to be seen, would open the upside once more. The implied target from the big base pattern remains sort of 13.50. So could see some significant improvement there on the euro. Sterling is a little bit less positive than it was. It sort of rolled over a touch last week. Bit of disappointment from the sort of more arguably dovish outlook from the Bank of England. Can all this data that we see from the UK this week help to improve the expectations there, and of sort of monetary policy going forward, and also help to stabilise sterling? Support for sterling comes in around about that 28.30 mark. That needs to hold. If that goes, then you're going to, I think, turn into a bit of a range play. 27.75 remains the key support on sterling. In terms of your dollar yen chart, you have rolled over a touch. It's not necessarily sort of lost momentum entirely, but it is looking a little bit less bullish. There's still support around the 113 big figure, but it needs to re-engage the bulls and start to sort of pull back higher again, to really sort of suggest the market is pulling out, because you've got that big Fibonacci level, the 23.6% fib level, 1425, which has been holding back the rally. That needs to be broken to the upside. Now, in terms of your equity markets, this is interesting because we've started to see the S&P 500 just rolling over a touch. Bit of a range-bound play at the moment, sort of between 2380, 24 big figure. It's interesting because you've seen that it's starting to react a little bit less positively, or certainly more cautiously, with the sort of rather maverick moves that we're seeing from Donald Trump, with this sort of sacking of James Comey, the FBI director. That's certainly not helped equity market sentiment in the States. Will it start to see that you get a little bit of profit taking? The VIX hitting sort of record levels below 10 last week. That was a bit of a telltale sign of perhaps a bit of complacency in these markets for the bulls. But what we've seen is the DAX pushing out to all-time highs on Monday morning. Not holding the gains, but still looks fairly positive. But can it sustain the move to the upside? FTSE, similar story, but FTSE has been held higher by the oil price that has rallied sharply. That big sort of factor in the FTSE 100 is the basic resources prices, so that has certainly helped to pull FTSE 100 higher. Again, can FTSE sustain the momentum? In terms of your commodity prices, well, we've seen that the gold price has rallied quite sharply in recent days, nicely higher. Now it needs to break through the 1240 level. If that can be sustained, that move above 1240, then I think that's a near-term improvement. I think between 1240 and 1260 you're sort of relatively neutral. I think on the outlook on gold. Above 1261 I think you're breaking into more bull territory, but certainly for now it's just still a bit of a bear market rally. Can it sustain the momentum through that 140 bucks resistance? The oil price, as I said, rallying hard on the short covering. I think again it's sort of probably going to be turning into a news flow driven news flow driven instrument again. I think watch out for the inventories on Wednesday, watch out for news flow surrounding this OPEC production agreement. But you've got some resistances on WTI. Needs to break through 50.20 on Brent crude. It's 53 bucks, so some key moves there. So it'll be interesting to see if we can continue higher on the oil price. But it's the sort of economic calendar this week which is focusing not on the States but more on the Eurozone and UK markets this week. As I said, Tuesday and Wednesday, lots of data coming out for the UK and the Eurozone, and we're looking out for possibly the Aussie unemployment data gives you a little bit of volatility for the Aussie on Thursday, and on Friday we're looking at UK retail sales to really sort of start to drive volatility again in sterling. Little bit of possibility of volatility through the dollar in the fact that we've got the Philly Fed on Friday as well, but generally speaking the main focus this week is around sort of sterling and the euro. So I wish you good luck in your trading, and I'll speak to you next time. Thank you.